a fast-growing quick service restaurant that meets consumers at affordable price points. Mr. Ebele Enua brings with him a wealth of experience, and he has been a player in Nigeria's retail space for more than a decade. He founded the companies Sundry Foods in 2004 and Sundry Markets in 2015. And prior to Sundry Foods and Sundry Markets, he worked with Stanbic IBTC, where he acquired diverse experience in areas such as business assurance, business and financial advisory, and investment banking. It's a great pleasure to have you today, Mr. Enua, and thank you for joining us. Mr. Enua, one sec, please.
Okay, good afternoon. Fola, good afternoon. Thank you for that introduction.
Good afternoon. It's a pleasure to have you once again, and thanks for joining us. And I guess for the sake of time, we can start with the questions, or let me start with an interesting topic, particularly when you consider how Nigeria's retail space is perceived from outside, with the consumer environment being exceptionally challenging. Many foreign funds have sold off positions in large FMCG names over the last decade. Yet, sundry markets, continues to attract interest, and I think they recently raised some investments from a South African private equity firm. Can you just talk us through the positives that you are seeing in this climate and how you've been able to sell Nigeria or, even Sundry as a viable business opportunity to investors who in general may be skeptical of the market?
Yeah, thank you for that question. I mean, the facts are that the operating environment, the economy, all of the indices at the macro level give enough reason to make people worried, concerned, and scared. And so for those who choose to pack it up and go elsewhere, they're not entirely wrong. But the reality is, like most things, you must take a long-term position. And if you look at Nigeria over the long term, historically, Nigeria has grown, over the period, over the horizon. And the reality is that Nigeria will continue to grow, over the long term. So for the investors that you've mentioned who are taking positions in our business, while others are packing up and leaving, the simple fact is that they are seeing um, the future. They're taking a long-term position, and more importantly, they can see how our business has performed under different scenarios. We have enough history to show how our business has performed over the good times. Um, if you're looking at us today, you can see how we are performing over what we might term bad times, and we've also seen our business perform, over what I would call extraordinarily bad times, when we refer to the pandemic. And over all of these differing periods, our businesses have thrived, and this is what gives the investors the confidence to continue to to back us as we march this on this journey.
Great, thanks for that, Billy. And I guess what I could take out of this is that your business has been resilient, and one could also not discount the resilience of the Nigerian consumer as well, and also your strategies in actually growing in this challenging environment. But I'd like to now focus on Market Square, which is a very interesting story actually. So from my understanding, it's operated since 2015. Your business continues to expand its presence in the Southwest. So if you could just talk us through how current market dynamics compare with, say, 2 to 3 years ago or pre-pandemic, and what does this climate demand of you in terms of your retail strategy?
Yeah, I mean, look, we got into the retail space after looking at data that showed that the Nigerian FMCG, fast moving consumer goods market, was being serviced in a almost archaic or prehistoric manner. Most of retail trade is done in an informal setting, in open markets, in unhygienic spaces, and in very crude manner, quite frankly. And most countries and most economies around the world of similar size or bigger size or smaller size have since evolved from doing retail in such conditions to doing retail in covered, air-conditioned spaces with good hygiene practices and standards, and very good level of customer service, so to speak. It felt to us like a no-brainer that there was a need for Nigeria to move to the next level. In fact, we were probably 30 years behind moving to the next level. If you go to Ghana, for instance, it's just down the road from us here, you will find that a lot of their retail trade is done in covered space. If you go to South Africa, almost 80% of all retail is done in covered spaces. So that's what prompted us to get into this space. And quite frankly, we saw a lot of headroom and a lot of opportunity, for growth. Um, Somebody or one of our competitors has suggested that Nigeria, could take 500, of such modern retail spaces or stores around the country. And if you count how many there are, they're probably, less than 100, far less than 100 today, so to speak. And so when we got into the space, we were affirmed. Our thoughts and our research were affirmed because the way consumers embraced our offering proved that Nigeria was indeed ready to change, and it only needed for entrepreneurs to get into that space and create those services and offerings for the consumer to come and patronize. Of course, the earlier years were, interestingly, we started, 2, 3 years before, 4 years before the pandemic. And as with every new venture, there's a learning curve. And so of course, there was a lot of stumbling and struggling to get things right. And as we started to, try to come out of that, of course, the pandemic hit. And the pandemic presented itself with quite a challenging environment, to trade in, considering that most of us at this age had never seen a pandemic before. So and none of us went to school to learn how to do business, in a pandemic. So there was a lot of learning, by trial and error. But one of the things that we saw during that period was, despite all of that chaos, because we are in a space where we are offering products and services that are essential to the consumer. We even saw a stronger demand, quite frankly, for our products during those periods. And the key challenge that we faced in that time was more of a supply chain, challenge. Because of course, there were all sorts of restrictions of movement, and even though they said essential goods could move, there were all sorts of restrictions on the road. So getting products into your stores as and when they are needed was particularly challenging. And that was one of the things that we faced. But in addition to that, of course, that the economy, those are also the periods where we started to experience a lot of struggle. The currency struggled. There were closures of our land borders. There were all sorts of changes in policies, which also aggravated the situation. So we're fighting so many battles, but at the end of the day, we came out with our heads high. Now, post-pandemic, the biggest struggle that we find ourselves in is that to do with, again, primarily, I would say inflation. Inflation at an unprecedented level, is what we are experiencing, particularly with the kind of goods that we offer. And while inflation, the inflation rates or the inflation figures show a rate of inflation across a basket of goods and services that are way beyond what we offer. For the things we offer, I like to think that we're seeing something a little bit more aggravated than what's reported on a general basis. And so, first of all, trying to that inflation is a function of so many things. One of them is the currency. The other will be what we've heard people refer to as imported inflation. And that of course refers to the fact that there is inflation happening worldwide as a consequence of so many different reasons. Oil prices are up. Production capacity in countries where a lot of goods and services are produced, like in China, are constrained. So there's been a lot of quantitative easing happening, in several countries across the world. So one might say there's a lot of cash flowing, but not enough goods, moving around, and that has caused inflation. And because we're a heavily import dependent economy, we are bringing in all of those inflationary pressures into our own economy, which is also being aggravated by the exchange rate problem. And I worry about the consumer because, there's nothing we can do. We buy products or we receive products at certain prices, and we have to sell them at those prices. There's really we're a retailer. Our job, we don't make a lot of these products, and there's really nothing we can do to control what those prices are. We worry about the consumer, and we wonder how the consumer is coping in this environment. But like you rightly said a few minutes ago, one of the things we've seen over the past few years is that the Nigerian consumer is very resilient. And I find it very impressive myself, operating in this space.
Thank you for that very, very comprehensive answer, Billy. So, I mean, it's quite interesting because one has to appreciate global development and also see it trickles down to the average consumer on the street. So, that's really appreciated. But I guess the other important things to take out from your comments is one being that during the pandemic, the challenge wasn't necessarily demand, a drop in demand. The challenge was more of logistics and FX challenges and other operational challenges, which is quite interesting and which continues to tie into that resilience and that continuous demand for essentials. So thanks for that. So everyone, to everyone listening, just a reminder that if you have any questions, you can type them in the Q&A. Is there a Q&A tab? Yes, so you can type them into the Q&A tab, and I'll read them out loud. So just moving on to the next set of questions. So I guess you've spoken about, how the consumer gravitates towards essential products, but just in appreciating or understanding this trend, and still with respect to the supermarkets, what level of down trading are you seeing with consumers? So consumers shifting from high priced or mid priced products to low priced products.
Good afternoon, everyone. It appears Fola is having network challenges. I'll reach
Okay,
out to her
all
very
right.
quickly, but just give us a minute and we'll be back shortly. Thank you for your patience.
Any challenge? We're good. Okay.
Apologies for that, everyone. I had a small technical issue with my laptop. So I was asking, really, what level of down trading are you seeing across your
Internet. We're good.
supermarkets? And
Hmm?
is this determining, or is this a function of your strategies lately? And how are you dealing with the level of down trading?
Okay, yeah. So Nigeria is a peculiar environment in the sense that the reality is that there isn't a lot of options for the consumer. You know that our manufacturing capabilities are quite shallow in any category or in any range of a particular type of product. You might find that there may be 2 or 3 local options. There might be a few imported options, but in a lot of the sense, I like to think that the local options or locally produced options are cheaper than the imported options. And so while the more affluent consumer might be, more inclined to the imported options, the local, the rest of the populace or the consumer base, will generally deal with, what is locally produced. That's not to say that we don't have good quality products that are produced locally. Very good quality products. And even those more affluent customers will typically have their staple Nigerian products that they do patronize. Now, because there isn't so much, I want to use the word breadth of options, the concept around down trading is not something that we are seeing so much of. And Nigerians are also very brand-centric consumers. We are very brand-centric. So, even if you think about it yourself, there are certain products that, come rain, come shine, that is the product that you just want. If you are a peak lover, a peak milk lover, you're almost always going to buy peak. Because what are the alternatives? Tree Crown or whatever else is out there. You may just not like the taste of that particular product as well as your favorite product. So we're not seeing a lot of down trading. However, we've seen certain cases where a manufacturer is able to replicate the quality, taste profile, and all of those characteristics of a very popular product and provide the customer an option that is quite similar at a lower price. And customers, out of curiosity, will first of all try that product, and where they like it, they will continue to, to buy that product. So the point I'm trying to make there are opportunities for consumers to switch if the manufacturer gets his product right. But other than that, Nigerian consumer is very brand loyal. That is what our data actually suggests, and our observations as well.
Okay, thanks, Ebele. It's quite interesting that you compared the brands, particularly the milk brands, and how consumers would respond to each kind of brand. And it's I quite appreciate it because you as a you stand or you sit around the supermarket or distribution chain, and you can be neutral in your assessment of consumer behavior. So that's quite appreciative. But let's go on to your actually still on customers. I'm still quite keen to understand. Yes, I know you mentioned brand loyalty, but in terms of your supermarkets, how sticky would you say are your customers there? And what sort of competition are you seeing from other supermarkets, not just the formal retail outlets, from the informal outlets? What sort of competition are you seeing, and how are you actually disrupting locations maybe when you move in there, and the demand dynamics changes? So just your comments around the consumers, particularly for the retail supermarkets and footfall.
So today I don't believe there is a strong competitive environment. I say this in comparison to what you might find in, say, South African retail market or a UK retail market. In the UK, you're walking down the street and you see a Tesco vehicle pass by, and there might be a statement like, if you find this product cheaper, we will match it. We will match the price. In South Africa, every retailer says they have the lowest price. And in any square block, you might see 6 retailers, with large stores facing each other and all justing for the same consumer. Nigeria is serious. The modern retail space is, let me just say, first of all, the retail space as a whole is very fractured. It's fractured in the sense that what we have is traditional open markets on one side, accounting for the bulk of all retail happening. And then we have modern retail, which is new, which is now trying to provide an alternative channel for the consumer. Of course, in between the open markets and the modern markets, there are covered markets, or what you might call, they are quasi somewhere between traditional retailers and modern retailers. They are covered stores, but they are not modern in any way, also providing some of those services. What we are providing as modern retailers is a different product. And oftentimes I wonder if it really is. So it's really a choice. For a lot of consumers, they will say they think the products are cheaper in the open market. And I sometimes dare them. I say, go to the open market, pick up I always use the word pick because it is quintessential Nigerian, commodity. I say, pick up a tin of pick, and then come to our stores and pick up a tin of pick and compare the price. So I tell them that it's to a large extent is an illusion to say that prices of products in the open markets are cheaper than what you might find in modern retail stores like ours. But over and above that, what I also say to people is, if you go to the open market, you are walking into a place where, first of all, you struggle to find parking. Then when you park your car, assuming you came with a car, you are afraid as to what will happen to that car. By the time you come back, there's a risk that that car may not be there. So there are security issues as well. Then you are walking down and around in the market. There is rain could fall, mess up your nice hair if you're a lady. If you're carrying a bag, you can get snatched. There are all sorts of discomforts. So to save what may actually be 200 naira, quite frankly, assuming that there is any price difference, to save maybe 200 naira, you go through all of this inconvenience, to get your products. And I asked the person, I said, if I were to tell you to come to my store and pay 500 naira more than what you paid in the open market, but you get air conditioned, so you're walking around and you're not sweating. You feel safe when you're walking around. You're not afraid that your car will get missing or something will get missing. You are certain of the authenticity of the products that you are buying. And all of these extra qualities that we offer, there must be a price to it. And if you can quantify that price, you should be able to decide for yourself, is it worth the price to go here as opposed to go there? And in that context, I don't believe there's any strong competition in the space. Today, it's really a function of choice as to what you want. If you just want the product in dry bank, no frills with all the risk, you go here. If you want a comfortable retail experience that's devoid of all of that risk, you go there. And so far, the consumer, at least we have enough customers coming into our stores to justify that there is a market, and that market is not finishing anytime soon for modern retail.
Great. Thanks for helping us unpack that. In fact, there were a lot of gray areas that I had in the past that you've helped to demystify, in my view. So still on price points, actually. So the next question is in two folds. So the first one is, I'll use an example to ask the question. So you find that if you wanted to buy a bottle of beer and you go to just a local pub, you find that it will be cheaper than if you go to like a lounge or a restaurant. And if you ask questions around why is it more, they will tell you, oh, I have to pay more rent. I have to bear a higher cost of, generating my power. But then for you as a supermarket, whether you like it or not, you are indirectly competing with the informal market, and you have consumers who would, I know you mentioned a lot of challenges, but who would say, okay, you know what, I don't go to the market all the time, but then, the lower cost I'm paying for if I'm not paying 500 naira extra for that, is still enough for me. I would accept that rather than, going somewhere where I would pay more money. So my point is, how much of a markup is on your products such that you are able to balance, one, not pricing your products too high, and at the same time also making a profit or making decent margins, even though you are not pricing them too high significantly. And the second one is still on the price points, is how much deviation is there between the recommended retail prices from your suppliers and what you price in the supermarket?
Okay, I mean, I'll probably start with the second one. I don't think anybody's trying to regulate prices anymore. I don't believe manufacturers are actually still trying to give you recommended retail prices anymore. That was maybe 10 years ago, maybe 20 years ago. I haven't seen that in recent years. It's an open market. But to go back to the first question, there's a difference in scale between what happens in the open markets and what happens in the modern retail markets, or in the former retail markets. The open market retailer, as you know, is a one-man business. They have limited capacity. So in terms of what they are purchasing, they might buy 1 carton of this, 1 carton of that, and that's what they have to sell. And oftentimes they are buying through distributors or through all sorts of middlemen. So you might find that their input prices, their input costs are higher than ours. So even though their margin is not high, because their cost is higher, their prices are quite similar to ours. Now, for a modern retail store, in any given time, we can be buying 1,000 boxes of that same product. We can be buying 10,000 boxes of that same product. We're buying oftentimes directly from the manufacturer. So even if our margins are higher, you might find that at the end of the day, we're almost at par with the market woman. So that's the dynamic that shapes pricing and ensures that we're also fairly competitive. There's also the fact that because we might be selling a lot more volumes, we don't need that much of a markup on our products, and we actually don't have a lot of markup on our products as a consequence of that, because we want to push a lot of volumes to the consumer. The difference between us and the bars, as you mentioned, is that while a formal bar, an upmarket bar, is not a volume driven business. So the same volume of people that go into the local bars is probably the same volume that will go into that. So there's no volume differentiator between the two. And so because you're right that their costs are higher and they have to make that money back by increasing their margins. That market dynamic is different from ours completely.
Thank you. Thank you for that answer. Just a reminder to everyone, if you would like to ask a question, just to if you would like to speak, ask your questions verbally, you could just raise up your hands using the hands raised tab. And just a recap, we are talking to Ebele Enunwa, who is the founder and CEO of Sundry Markets and Sundry Foods. Sundry Markets owns a chain of supermarkets and owns a popular quick service restaurant called Kilimanjaro. So just the last question on the supermarket or just on the supermarkets actually. So what's your view on gray imports, and is there any policy on whether to accept such brands on your shelves or not? And if not, what sort of mechanisms are in place to verify the authenticity of your product sources?
Well, we partner with reputable vendors. And really we lean on them as much as they lean on us. What we say to anybody is that we are a conduit to the market, which is one of the things I find interesting. I've talked about this before, that in Nigeria a lot of policies, government puts out a lot of policies to aid the growth of the manufacturing sector. But the manufacturing sector cannot thrive without the retail sector, because manufacturers can't produce the goods and sell it themselves. So if you only focus on growing manufacturing capabilities and you are not focused on growing retail capabilities, then it's like you are feeding the body and you are leaving the leg to falter. And what will happen is that ultimately the leg cannot carry the body. We are indispensable to each other. And really that's really the way we try to ensure that our vendors see us as a conduit to the market. If they bring rubbish products and put on our shelves, they are the ones that suffer just as much as we do, because the consumer will not buy those products, or the consumers will buy those products and be unhappy about what they've bought and ultimately won't come back to buy it. And who suffers it is the vendor. The manufacturer or the importer suffers it. So our selection process for vendors is the control for ensuring that we are only getting best quality of products to the consumer at any point in time.
Yeah, thank you for that, Ebele. So if we look at both the QSR and supermarket business, and I know you may have touched on this briefly earlier on, but what factors would you consider before expanding into an area, and especially given that your business is expanding across the Southwest? What are the factors that you consider?
Oh, I mean, everything we do is to the benefit of the consumer. So the first thing we must always determine is whether they are consumers of the profile that we feel fit the profile of what our brands offer. And once we answer that question, then we're good to go. But again, the reality is in both these industries, the consumer base is enormous. We all say that Nigeria is the most popular countries, most populous country in Africa. A lot of businesses across Africa and maybe across the world are, curious about, how to access, the markets here, the consumer base here. Similarly, for those of us here, we're constantly trying to ensure that we can reach as many customers as possible. The customers are there. For each market, there probably is a different, for each market type or income level of the market, there's probably a type of offering available that meets their needs. We do have a bouquet of brands and services that can target different types of clientele. And for us, it's really just how quickly can we get to as many customers as possible. And that's the race we are running today as we speak.
Thanks, Ebele. We have a number of questions on the chat box, so I'll just read the first one. What is the size of the addressable audience in Southwest Nigeria that can afford to shop regularly in modern retail in Nigeria? And how much experimentation has there been with retail formats that can be highly competitive on price with the open market, through, for example, low capex costs?
So I mean, first of all, our market is Nigeria. There's no particular, not a southwest or southeast or whatever. We're trying to reach customers all over Nigeria, and we believe that every Nigerian is a potential customer. Remember that we offer commodities. A lot of what we sell are commodities that people need for their everyday living and for life. And so while today we haven't created a product for the very bottom of the market, because even the markets that we're servicing today, we haven't finished servicing them. The reality is that there is a way to tweak the product offering to meet the needs of those consumers at whatever level. We just choose, to address a particular market today. And, until we believe we've exhausted that market, we will not move into another cadre or another strata of the market. What is the addressable market? I mean, for me, every single Nigeria is the addressable market. And I would again use the example of what Promasido did with sachet milk. At some point, the milk manufacturers, would have assumed that the addressable market was only a particular cadre or strata of the market. And Promasido came and proved them wrong, that the addressable market is actually almost everybody. That's the way we think about the market as well. Every single Nigeria is part of the addressable market. Just need to figure out the strategy and the product formats to push it, to push to them.
So it's having your products at every price point that caters to everyone at the pyramid. That's interesting.
And that's really the challenge, to figure out what works for different strata of the market and give it to them.
So the next question, the typical constraint on modern retail development in developing countries is the upper hand the informal market has through not paying taxation. So to what extent is this still a hindrance to development? Sorry, I lost that question. Yes, so to what extent is this still a hindrance to development, and has the landscape changed at all over the last 5 years?
But the first part of that question about
So
taxation.
so the first part is that the typical constraints on modern retail development in developing countries is the upper hand. So the informal market does not
Pay
you know
taxes.
they have a way of
Right.
avoiding taxes. So
Yeah. Not
to help
not only not only do they have a way of avoiding taxes, our government has even gone ahead and put in a law that exempts them from certain taxes. I think it was the Finance Act of 2020, where they said anybody who has a turnover below 25 million or so, it doesn't need to pay taxes. I don't know if they've removed that law now, but I found that very very auspicious, because it certainly creates an unlevel playing field, between the small business person and of course the bigger business people, and could create a situation where it is perceived that products, or maybe in reality products, could potentially be cheaper, in a small store. And I might have a small store actually trading next door to me, and what you are saying is that people should go to them. Now, the interest why when I saw that law, I was worried for a minute. Then I said, you know what, it might even be a good thing. Let everybody grow up. So maybe the guy next door to me, is able to trade cheaper, and everybody rushes to him. But what will happen once they rush to him? Within 5 minutes, his revenues will grow above 25 million. And once his revenue grows above 25 million, he now has to pay taxes. Then we can compete at the same level playing field. So yes, you're right. There's a peculiarity around those kinds of situations, but it's no different from the fact that people are able to trade without paying rent, quite frankly. You're talking about people trading without paying taxes. These open market retailers don't pay rent, technically. You ask me how much rent I pay in one of the stores, one of our big superstores. I'm not going to say it here, but we pay a shitload of rent. And we have to sell enough goods to cover those rents. These guys don't pay rent, and of course, they don't pay a lot of other things. But still, we believe we can compete for so many other reasons.
and I guess that links to the earlier question, the question I was asking you earlier on about some of these smaller players having the upper hand. But I mean, like you've mentioned, you've addressed this and given context to it. So the next question is, the listed consumer companies in Nigeria reported a slowdown in growth and rising cost pressure in Q2, suggesting to us that the second half of the year is likely to be tougher than H1. Are you getting the same sense?
Repeat that question.
So the listed consumer names, they really had a bad Q2, and they had higher cost and slower demand, and so I guess what this person is asking is if you are getting the same sense from your businesses.
Well, costs are higher. We are not yet seeing slower demand. I'm not sure who they refer to as having slower demand. Again, I would just point out that the fact is we sell commodities. You are not going to, if you use one bar of soap in a week, you are not going to start using half a bar of soap, because whatever, prices have gone up. Yes, maybe this goes to your earlier question, the question around down trading. The worst that could possibly happen is that you either go from Lock soap to some other soap, and maybe someday to Oshududu, your local soap. That's the worst that could happen. But you're not, I'm not clear. I'm not seeing an easing of of demand. But certainly, I agree, cost pressures, particularly with energy costs. We all know that public power supply cannot meet our needs. So, public power supply probably gives us 30% of our power needs. 70% of our power needs come from generators. Generators run on diesel. Diesel has gone from 250 naira a liter sometime last year to 800 naira a liter. That's a 300, that's a 300% increase in energy costs. That alone, can break somebody's back. And those are the kind of challenges that we are facing, in this period.
The next question is quite interesting, and it's I also want to hear what you have to say on this. When is Market Square coming to Lekki side?
Soon. Particularly depending as soon as they find us space. One of the biggest challenges in our retail sector, particularly with growing footprint, is retail space. In a lot of markets, developers are building out retail spaces, so it's easy for a retailer to say, I will open 100 stores this year. One of our investors sent me a message last night and said, this, I won't give the name of the retailer, but this retailer is opening 200 stores this year. I'm trying to open only 7. It looks embarrassing. The difference in scale of number of stores to be opened in a particular year. But the simple reason is that their markets have developed to a point where developers, as they build residential properties, as they build commercial properties, they are also building retail properties. And a lot of times they build mixed-use developments where the ground floor is retail, certain floors are residential and some floors are commercial. In a lot of the instances, that's what's happening. And so a retailer can say, I'm going to open X number, and he will open it. But here, we literally have to manufacture our own retail spaces. We build our own stores. And so we're not only, just like with most businesses in Nigeria, where you are generating your own power, instead of somebody else doing that and supplying to you. Similarly, not only are we generating our own power, we're also building our own boxes. And that makes it it makes it a struggle to reach the market as fast as we can. So for those of you out there, particularly the person asking the question, please look for a space, build out a store, give me a call, I'll rent it from you and open a store right next to you if the market makes sense. And that's my offer here today.
Thank you for that. So I mean, it's very interesting because so the challenges are deterring, but then if you see an opportunity, you take advantage of it.
Yeah, so the big opportunity I'm actually putting out there is for people to develop retail spaces. The retailers like us are happy to take it. You've done your homework, you've done the research, and you've selected the right sites. People will come and take those spaces from you. Yes, please go ahead.
Yeah. So then I want to talk about demographics a little bit, because I know you said that your strategy is more inclusive and you are looking at every cadre of consumers. But looking at your QSR and supermarket businesses, what factors would you typically so I mean, how important is your growth strategy in the context of winning the current young demographics, particularly with the restaurant business and with the trend of Nigeria's youthful demographics? Also, how are you positioning yourself against the trend that you're seeing?
So, every business must innovate or die. It's probably a cliche, but never has it been, so true, especially in the context of the question you asked. And for us, one of the things we're always doing is watching the trends across the world, trends in our particular markets, so we can try and respond ahead of time. I talk about this, sometimes. I said for those of us in our 40s, and I may have given away my age, For those of us in our 40s, we grew up eating meat pie. Our children are growing up eating pizza, They probably are not. They probably don't even care for a meat pie. For us, meat pie was a very important, part of our snacking menu. And so the reality is that the menu changes with each generation, one way or the other. Again, rice is a big part of our menu growing up. There was nothing like Indomie when we were growing up. Today, Indomie is a significant part of the menu, and these are real changes that are happening. And for us, we keep watching those trends, and we try to get ahead of the market by introducing products that we think the next generation will be interested in by the time they become adults. Because today, particularly in the restaurant space, our target market is the working class. And the working class is basically, why are they an important part of the target market, is because they are, cash rich and time poor. And they need to outsource their meals, to come to businesses like ours to prepare for them. And so, the children of today, when they become, working class, they will also form a core of our market as well. And we need to be giving them what it is that they want to eat. Otherwise, we'll find ourselves missing in the marketplace, at that time.
Understood. We are approaching the hour mark, and so I'd like to round up with a set of questions. But okay, I think we still have a few questions from the audience, and we'll take this and I'll ask my last set of questions and we'll call it a day. So let me start with this. Please, could you share your view on why the Nigerian market has proven difficult for upstream FMCG companies, so the food producers and the brewers, despite their long histories in the country, more than 100 years for some of them? So what do you think is responsible for such difficulties that they are having?
Well, I think, those that have stayed long, I don't think they are struggling. No. If you look at Nigerian breweries, and the like, they are thriving. Guinness, I like to think that they are thriving. Um, but let me go back and answer the question specifically. I think what the question, I can see the question on my screen, and is a lot longer. It talks about FMC upstream FMCG companies, talks about downstream customer facing retail businesses from abroad. I think the question refers to why businesses from abroad have struggled and suffered in Nigeria. Um, you know, and the simple reason is this: Nigeria is a very unique environment. And I think a lot of people underestimate how unique the environment is. And it's so unique that you cannot be sitting in the Netherlands or in New York or in Johannesburg and dictating how the business should be run in Lagos or wherever. My advice to any foreign business that's trying to, do business in Nigeria, serious business in Nigeria, is to find the right partner to work with. And not only that, when you do get that partner and you partner with that person, allow the partner to lead and give him the freedom or give them the freedom to decide how to implement the strategies. What worked in your country will almost not work in Nigeria verbatim. It needs to be tweaked. And I think a lot of reasons why some of the businesses have suffered, some of these businesses have suffered, is that they've been too rigid. And they've tried to run the businesses in Nigeria the same way they've run it abroad, because of course it works for them abroad. So why not? But exactly why not is the real reason. why it won't work in Nigeria. Nigeria is very unique and very different. And that's the real reason.
Okay, so the second one is downstream. So in downstream, consumer-facing businesses. Okay, no, I think you've covered this. I'll go
Yeah,
to
it's
the
all
next
part of the
one.
same question.
Yeah, so the next one is what makes business models that work elsewhere unsuitable for Nigeria, in your view?
That's the same question I've answered as 1 to 3 points under one question. The operating environment, the laws in their countries, the cultures in their countries, the mindsets of the people in their countries are different from the laws in Nigeria, the culture of people in Nigeria, and the mindsets here. Um, and they have to allow Nigerians, help them make the businesses succeed. Give them the freedom and the resources and support, but allow them lead the businesses. But of course, you can only do that if you've selected the right partner. If you selected the wrong partner as well, then there's a problem. So you find that some of the businesses that have thrived, that have done 100 years, for instance, the Unilevers, the Nestle, the Nigerian breweries, that's what they've done. They've somehow been able to understand the nuances around the Nigerian environment and done business in Nigeria the way business in Nigeria should be done. And by doing so, they've been able to build formidable businesses here.
Thanks. So I would like to the next set of questions actually focus on tech, which I think is important, particularly with the consumer goods space. So the first one is have there been significant changes in how technology is used to monitor and stock levels, to monitor your stock levels, and what sort of technological capabilities are you seeing from your partners in tracing stock levels and maximizing potential turnarounds? So it's just to try and get a feel of how technology is important in your distribution and sales process.
Yeah, so the capabilities around how you process data is really the important technological advancement that has created a game changer for retail worldwide. Today, there are predictive capabilities, and those predictive capabilities allow you to determine to a very reasonable extent what your consumer wants, even before the consumer knows what he wants. And then that allows you to then work backwards to source and provide those products ahead, so that when the consumer sees it, he goes like, yeah, that's exactly what I want. So predictive technologies are the thing. They are the thing that creates, a step change for us in the retail sector. And harnessing and deploying those technologies in Nigeria is one thing that we're very anxious to do in our businesses as well. Over and above that, although this is very far-fetched from the Nigerian environment today, we're seeing what Amazon is doing with Amazon Go, where you can walk into a store and walk out without having to interact with any human being, and you get charged for everything you picked up in the store. And if that becomes mass market available, that could be a significant game changer in the retail space as a whole. At retail's infancy, um, you would walk up to a storekeeper's gate. You will not be able to walk in to interact with the stock. You will tell the storekeeper what you want. He will go into the store and bring it out and give it to you, collect his money. Yeah, that was what retail was maybe 100 years ago, we've gone from that to now people walking through the store and picking up what they want and then going to pay for it. And I believe the next phase will be people walking into the store, as we see with Amazon Go, and picking up the stock and not even having to interact with anybody and walking out. That, is something that excites me. I like to see that happen in my lifetime as a norm, as a matter of norm.
Yeah, so would we. So would we. Thank you very much for that. The last few questions, the last question around tech, and then I'll take one from the chat box. So, are you seeing any potential for partnerships with tech platforms to facilitate lending for consumption and drive in-store demand? So the challenge we have here is that a lot of the transactions are cash based, or your card based. We haven't really seen a situation where people would, on a large scale, use their credit cards, or use credits to actually pay for consumption. But are you seeing any kind of potential for partnerships within that area?
Well, we've grown up as a cash-based society. It has its good and it has its bad. I guess one of the bad sides is that it hasn't allowed us to see the full potential of the Nigerian economy. Compared with other developed countries, credit has created an expansionary effect on their economies. So in that context, if that could happen, it will certainly have its benefits, because of course it's going to spur demand, quite significantly, and to our benefit for those of us that are retailers. But from a personal perspective, I worry about people borrowing for consumption. I always want to encourage people to borrow for investment purposes, not for consumption. So it's not something I'm excited about seeing as a change in my industry. But as it relates to partnering with tech platforms, we are very anxious to work with tech platforms to find value-added services. So the one value-added service you talked about is credit, but I don't think credit is the most relevant for grocery retail, for commodity retail. But I believe there are so many other services that can plug in with us across all of our touch points. Today we have over 150, 160 touch points across the country. This time next year we could have 250. And if we leverage that with a fintech or some other tech platform, to provide all different types of services to the consumer, I think the consumer will be as much a winner in such a situation as much as we, the two partners that have come together to provide those services.
Interesting perspective. Thanks for that. So the last question would be from the chat box. We have seen data about increasing urbanization in Nigeria. How spread across will you say the urbanization is, or is it mostly concentrated in select regions?
So you say that again. Data in urbanization.
Yes, so data about increasing urbanization, and so how sorry, how spread across will you say the urbanization is, or would you say it is only concentrated in select regions?
Yeah, no, okay. I think the question is not entirely clear, but I think I understand what the person is saying. Is that how and I want to guess that person lives in Lagos. One of the things that I find is that people that live in Lagos think that everywhere else is not. It's not. There's a lot of, or it's less urban, or there's a lot of less urbanization, or there's lower urbanization in other places. The reality is that I like to think that in every state of this country there are large pockets of urban areas. And for us, it is also why you will find that our growth model is to go to every part of the country. We're not keen to just populate one city, Lagos, which is, uber, uber urban, or Abuja, which is, another uber urban area. You will find us in Aba, which is the least likely place anybody wants to go to do business. because of the perception of that market. We are in Aba and we're thriving. We are in Owerri, we're thriving. We are opening in Kaduna very soon. We're very anxious to open that store. We're in Enugu and we're thriving. We are in Benin and we're thriving. We're trying to get into Abeokuta. We'll go to Shagamu. We're in Ilorin. We're thriving. So there are many urban pockets in Nigeria, and the answer to that question is it's not one I can put data to, but it's one that our own experience proves. Absolutely.
Thanks. So just out of curiosity, you mentioned that you are opening or you're planning to open in Kaduna, which is quite interesting because it shows a lot of confidence from your business in that area, despite the insecurity challenges and other challenges going on. So what exactly are you seeing that is incentivizing your plans to open up in that area?
So what's the meaning of the word fortune?
Sorry?
What's the meaning of the word fortune? Fortune, right? The word fortune has to do with providence, isn't it?
Yeah.
Right?
Yeah.
And there's a saying, fortune favors the brave, isn't it? Yeah. So it's quite possible that we are brave or maybe we are foolish. But oftentimes our decisions end up, validating us. The facts are, despite anything that's happening, the reality is that there are human beings living in all these places. These human beings need these basic services, and somebody must provide them these basic services. And we have chosen to provide people the services that they need to live a decent life. And people reward us for those decisions that we take.
Great. Very, very good way to end the session. To end the session on a positive note. I admire the confidence and the boldness actually, and so thank you for that. Once again, thank you for joining us, everyone, in this session. It's been very insightful. If you want a copy of the recording, this can be sent to you, and you can also, I think the playback will also be left on the Teams app. And thank you, Ebele, for that very comprehensive analysis of the consumer market. It's very, very so one would be very grateful to see that you sit at a place where you have access to the average consumer and extract more color from you in that regard. And thank you for taking time out of your busy schedule to talk to us. So this concludes this session. Enjoy the rest of the evening, everyone, and see you next time. Thank you.
Thank you very much, everyone. Thank you. Thank you. I appreciate it. Have a good day, everyone. Bye-bye.
Have a good evening, everyone.
Thank you. Bye.